Last time we were together was Texas.
That was my second round of COVID.
Yeah.
All right, guys, we're bouncing around here. It's going to be a big week. We have a slew of economic reports, including a very key inflation print. We're also going to get retail sales. Mike McKee just talking about the Michigan report, which will give us an idea of consumer sentiment. Sentiment, animal spirits, so important in terms of if you're freaked out and thinking you might lose your job or something, you're not going to go out there and spend. Already we're seeing in the housing market where contracts on homes are coming down, right?
Yeah, I saw that story this morning, Carol. It's remarkable to see that because people get cold feet, perhaps.
Yeah, well, exactly, right? And you think about all the spending that goes into it. And what's interesting is Jan Hatzius also has a story on the terminal that talks specifically about how U.S. payrolls gains, they're overstating job growth, and he goes into the specifics. So, all right, you are listening to Bloomberg Business Week. Let's get to a big story, and it has to do with Elon Musk. We've got to do this. We're going to do it for the next 30 minutes about his about face on his deal to buy Twitter. We're going to get to that, but we also have some breaking news on Rivian.
Yeah, Rivian planning to cut hundreds of jobs, following a surge in staffing. That story just crossing the Bloomberg terminal. It's by our own Ed Ludlow, who joins us right now. Ed, our West Coast correspondent for Bloomberg News. Ed, give us the details here.
Yeah, it's interesting. So according to sources, it's around 5%, a few hundred jobs. But this is a company that's grown amazingly fast, you know, more than doubling headcount to 14,000 in the last year. And they launched these battery electric pickups and SUVs pretty slowly. But we had the numbers last week, of course, for second quarter production, and they're really picking up pace now at a time where the world is changing, the macro picture worsening. So they're looking at what they've got according to sources, and they're kind of trimming the fat in areas they just don't need.
I don't know. How do we read this then? Is it just a case of kind of a recalibration of what Rivian really needs ultimately, or is it something more dramatic?
Yeah, recalibration is a good way of putting it. You know, they're well capitalized, almost $17 billion on the balance sheet. You know, they have really notable investors. They're frustrated. The factory is capable of doing much more than it is. It's just that part shortages, chip shortage in particular, is still a big problem for them. And we're talking about basic chips, things that translate the press of a button into air conditioning. We're not talking about high-tech stuff here. It's the same thing they're suffering from that the likes of GM, Ford are too.
Well, this is what I find particularly remarkable about your story, Ed, and the Rivian story, too. By many measures, Rivian should be a very successful company in the sense of demand is really hot. If you want a vehicle from Rivian, you're going to have to wait a long time. So let's say there weren't supply chain issues right now when it came to chips. Would these layoffs have happened?
You know, that's interesting. They are supply constrained in the sense that demand is much more than the vehicles they can possibly build currently. I would also point out a key piece of reporting that according to sources, these cuts are not targeted for manufacturing jobs.
Right.
The people working on the assembly line building the cars are protected. So this is kind of more like back office, marketing, business operations, areas where they have multiple people doing the same job.
But it just, so it sounds like, it's not the actual people kicking out the cars, it's the people behind the scenes. All right, speaking of behind the scenes, well, he's never behind the scenes. He's always out front and center, Elon Musk. So let's talk about it. Man, I did a Twitter poll. I have to look at the results about what we expected to hear from Elon Musk at Sun Valley. First of all, take us back there, because I bet this was like, man, we couldn't wait to see what came out of his mouth there, Ed.
Yeah, so Elon Musk spoke on Saturday at Sun Valley, behind closed doors, off-the-record session. And sources told us that he was disciplined on the Twitter side of things. You know, he declined to answer questions directly about the deal to buy Twitter. He made a general observation, sources tell me, about Twitter needing to be more transparent with its algorithms, with its data. But he was put on the spot and he said, you know, I'm not going to comment. And the rest of his appearance was about things we've heard before. Mankind needs to colonize Mars. Mars is a civilization life insurance policy, I'm told he said. He talks about global population growth, etc. So not much on the Twitter side. It's just the timing of the chain of events of the last 5 days has been, I don't even know what to say, strange?
Yeah, it has. I mean, well, the Friday post 5 p.m. Wall Street Time news dump of walking away from this Twitter deal was, you know, I think pretty orchestrated, I would imagine, as somebody who's been covering this stuff for a while. Ed, where does Twitter go from here? We learned about, you know, a little bit about what the company is telling its own employees about the deal, pending litigation.
Yeah. So I think we're headed for a legal battle. You know, the expectation, according to sources, is that Twitter makes a court filing this week. We go to Delaware, where the judge has to decide one thing: meaningful adverse effect, material adverse effect. Basically, did Twitter's handling of how they shared bot information fundamentally alter its business potential or the value of the deal? And if we go on prior case history, past precedent, very few in an M&A context have been able to prove that MAE thing. So it's going to be fascinating to see what the judge says. And also, I think possible out-of-court settlement. We'll see.
We're going to get into the legal implication. That's coming up after this. But in terms of color, are we surprised? And is this classic Elon Musk? Ed, you've been following this from the beginning and really giving us some great insight. Is this Elon just trying to get even a lower price at this point? Like, how do you read this?
So I spoke to a lot of investors at Sun Valley and on the phone, and loads of people considered buying the stock or more stock on the open market just so that they held it ahead of the deal closing. But there were some that held off because they felt that Musk was the wild card and that actually this outcome where he'd walk away was always going to happen. The timeline events is weird. Twitter's CEO and CFO were at Sun Valley. They did a briefing on Thursday here at San Francisco, Twitter's HQ, Twitter execs, about the bot issue. Then the Washington Post story comes out Thursday. Musk arrives Sun Valley Thursday. Friday after market, he walks away from the deal. It's just a bizarre set of circumstances, but that is literally what happened.
And that's a place where they could have tied it up, right? Like, I mean, this is where it's an environment where deals often are created or talked about initially or done.
Yeah, and to answer your question, I think we've all been thinking that Musk would come back in with a lower priced offer.
Yeah.
Based on the spread, what merger arbitrage specialists are saying, never happened.
Well, right now, shares of Twitter down 9.5%, trading at about 33 and change. Tesla shares are also under pressure, down about 6%. Ed Ludlow, thank you so much. Great color and great coverage through Sun Valley. West Coast correspondent at Bloomberg in San Francisco.
All right, Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching Bloomberg Business Week, watching us on YouTube.
It's good to be back in the studio with you, Carol.
I love being with you.
I'll be honest, I was getting pretty lonely, okay?
It does. It feels like, wait, doesn't anybody want to play
So close yet so far away.
All right, coming up, we're going to continue our coverage of Elon Musk and Twitter.
Speaking of so close yet so far away.
Nicely
done.
Did
it ever get close?
I don't know. This
Never
is
got
like
to 54.20.
intention. Well, the legal side of this might make it come closer. We're going to get into that in just a moment. First up, though, let's get back to top business stories and Charlie Pellet.
Hi, thank you very much. Twitter shares down now by 9.6%. Talking Elon Musk, got to talk Tesla. Its shares lower now by 6%. It is a down day, but do want to begin with a developing story. Rivian Automotive planning hundreds of layoffs to trim its workforce in areas where the electric vehicle maker has grown too quickly. This, according to sources. Right now, we have got Rivian trading lower by just about 6.2%. It is a down day with the Dow, the S&P, and NASDAQ all lower. Stocks are falling. Traders are bracing for that key inflation reading and the start of the earnings season for clues as to whether the economy is heading for a recession. As for the interest rate outlook, Veronica Clark is global markets economist at Citigroup.
We're not expecting, a near-term recession, of course. We do still expect the Fed can be more hawkish here, really just responding to high inflation. So I wouldn't be surprised if we see yields that are still moving higher. As we're getting, markets, of course, are pricing cuts as we're getting into, later next year. But this really just comes down to inflation. And if inflation stays high, the Fed might not be able to cut. And so we do still see some upside for yields here.
And right now we've got the 10-year yielding 2.99%, 2-year yield 3.06%. S&P down 35, down 0.9%. Dow Industrials down 94, down 0.3. NASDAQ down 211, a decline there of 1.8%. Gold down $8 the ounce to $17.34, down 0.5%. West Texas Intermediate crude down 0.7%, 104.10 now for a barrel of WTI. Recapping. Down Monday, S&P lower now by 35 points, down 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Our Charlie Pellet there with a Bloomberg Business News Flash. All right, we mentioned we're going to have more on the saga that is Elon Musk and Twitter. So our Ed Ludlow laid out some of the color when it comes to Musk's pursuit. He also touched on some of the legal concerns because, you know what, Tim, as on Friday, Twitter chairman Brett Taylor vowing that they're going to fight in that Delaware Court of Chancery to make Musk follow through.
I'll see you in Delaware. Got to turn my mic on. Jeff Feely is legal reporter for Bloomberg News. Jeff joins us this afternoon on the phone, not from Delaware, but from Cleveland. Jeff, good to have you with us.
I think you are in Delaware, right?
You are in Delaware, right?
No, I'm in Delaware. I love Cleveland, but I'm Delaware's home, baby.
Okay, good. So you are in Delaware. That's good to hear. So let's talk about Delaware being the place. It's interesting that we learned, I think, a lot if you were following this over the weekend, as you did, and you reported a lot on it over the weekend. The Delaware Court of Chancery. What happens in Delaware when it comes to this deal breaking apart? What are the legal options here for Musk and for Twitter?
Okay, so we're waiting on Twitter to file suit. We thought maybe Elon would try to take the lead and get out in front, but it looks like we're all waiting for Twitter to file the suit. And it's supposed to come sometime, between now and Wednesday. Hadn't come yet. I'm hitting the docket as we speak. So that suit's going to hit the docket, and then we're going to have a judge get assigned, and then we're going to basically turn on the jets, and we're going to put this on the fast track, and there's going to be a lot of information exchanged about bots and spam and all sorts of stuff. And then we're going to have a quick trial, and then before anybody can rule, there's going to be a settlement, and Twitter's going to cut the price, and it'll all go away.
You really are convinced that that's how it's going to play out?
Yeah, this is all about, I call this negotiation by lawsuit.
Interesting.
This is all about creating leverage.
Well, that's why I asked Ed. I mean, is this just a negotiating tack? Because it just feels like this has been Elon Musk's, mode, if you will, modus operandi, almost from the get-go.
All right, here's the drill.
I like Leon Musk. That's his twin.
Good Lord, right. Elon. He's been to Delaware before, okay, and he's no stranger down here. He was down here last year on the Solar City deal. And, he walked away smiling on that one. They said that he didn't, cram down an overpriced deal on the Tesla shareholders. But this is a different kettle of fish, if you pardon the cliche. You're talking about a purchase agreement here that got hammered out by battalions of lawyers, and, he can't just walk away. He's got to prove that there was some huge material adverse effect that blew a hole in this deal that can't be patched. And frankly, the experts have a tough time seeing that. So, Twitter's leverage is, okay, you signed the deal at 54.20, okay, and you knew what you were doing. You're a big boy, smartest guy in the world, richest guy in the world, blah, blah, blah. So you should have to eat the full 54.20. And, Elon's going, wait a minute, look at the difference look at the spread. Look, the market's falling. For God's sake, your stock's trading in the low 30s, the high 20s. Give me a break.
It's like when I buy that pair of shoes and then 2 weeks later they're 40% off. I'm like, darn, I want it at the 40%.
And you don't get to take those back to Marshalls or whatever and then go get the
TJ Maxx
off.
yeah, I got you.
Well, okay, Jeff, what about the idea that maybe Elon Musk over the last few months has lost a lot of his net worth given the decline in price that we've seen for Tesla, and says to himself, you know what, I no longer want to do this, and I would be willing to pay this $1 billion breakup fee just to walk away. What about that part of it?
That doesn't fly, though. You see, that's part of the problem. He agreed to buy Twitter at 54.20. Signed, sealed, delivered, lawyers, analysts, bankers. He signed it. It's a legal binding contract. Okay? So he, unless he can show this material adverse event, he's bound to those agreements. Now, if Twitter wants to avoid all the time, expense, and reputational stuff and all the documents that come out, then we can start talking about, okay, maybe the breakup fee. As my colleague Matt Levine noted today, the way the damages are going to go, it's either going to be $44 billion or $1 billion. There's nothing in the middle.
That is a must-read column. Hey, Jeff, just got about 20 seconds here, 25 seconds. Due diligence. I mean, he waived it early on.
I know. I mean, it's like amateur hour to some degree. I mean,
I know.
Don't ask me to explain it. It's Elon.
Man, I want to check out that, boring company. Make sure before I go through that hole that everybody did their due diligence on it. Listen, all I know is he's rewriting those Harvard Business School case studies because this one is a fascinating one. Jeff Feely, this was so much fun. Looking forward to more reporting from you and getting to check in with you again as this unfolds. As you said, it's going to hit the docket probably this week with a Twitter case against Elon Musk, making him pay. It's a breakup fee or $44 billion, at least according to our Matt Levine. I love the way Matt just kind of broke it down there. Check out that column, by the way, on Bloomberg.com, and our thanks to our own Jeff Feely.
Let's get to world and national news now in Washington, D.C. Here's Nancy Lyons.
Thanks, Tim. President Biden is applauding progress on gun safety, and today at the White House, he spoke directly to the survivors and families of those impacted by the recent mass shootings.
I know public policy can seem remote, technical, and distant from our everyday lives, but because of your work, your advocacy, your courage, lives will be saved today and tomorrow because of this.
Biden told those gathered that the new gun safety law opens the door to more legislation. It toughens requirements for those under 21 who purchase a gun and incentivizes local authorities to implement red flag laws that will help keep weapons from those judged to be dangerous. President Biden will be traveling to the Middle East this week, and in an op-ed in the Washington Post yesterday, he admitted that he knows many people disagree with his decision to travel to Saudi Arabia. But Pangea Policy's Terry Haynes tells Bloomberg Biden feels the need to pull the region together.
This is much more about Middle Eastern security and trying to shore things up in advance of a possible new Iran deal, pushing back at Russia's pretensions to a sphere of influence in the region, dealing with the Chinese economic interests, and again, trying to forge common cause with Israel here.
Terry Haynes with Pangea policy. A heat wave in Texas today is expected to push the state's electric grid near its breaking point. Residents and businesses are being asked to conserve electricity this afternoon. Texas's power grid remains under scrutiny more than a year after the system collapsed during a winter storm. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Massar, Tim Stanovic, we're live at Bloomberg headquarters in New York City, live in our Bloomberg Interactive Broker studio, streaming on YouTube. Hello, everyone. Good to be back together again. And we were kept apart because of COVID. And I feel like as we come back together, there's a growth in stories, again, when it comes to COVID.
Never a good thing. That could be a metric that we use, right? There actually is a reader interest metric you can scan on the Bloomberg terminal to see what readers are looking at for an idea of what is popular. I want to start with that Faye Flam story that you sent earlier, the Bloomberg opinion piece, Carol. It's Carol sent this early this morning, but for
basically
Bloomberg
saying,
opinion,
Stanovic, there's a target on your back.
Exactly. If you haven't had COVID yet, maybe you've just been lucky. Faye goes into all the reasons scientifically that, you know, even people who've been really careful might not be able to attribute the fact that they've been really careful to getting COVID, because many people who have been really careful, vaccinated, boosted, wearing those N95s, the BA.5 subvariant has been able to evade those measures.
There's something called COVID virginity. I had no idea. It's becoming more special now that it describes a shrinking minority. I'm reading from Faye Flam's story. The lucky few, like weight loss gurus, are only too happy to share their secrets to success. You feel pretty good, don't you?
I do, but like I said, there's a target on my back. Whereas my wife and son have recovered or are recovering from it, I feel like they've got the immunity now.
Well, and I do wonder about, we've talked about this with people who for a long, Taylor Riggs, I remember having the conversation, who like never stopped, you know, she stayed at the office, worked while many of us were at home, and for a long time did not get COVID. I think she succumbed in the last month or so.
Yeah, the trick is, you know, the trick is plan a vacation, and then you'll get it right before the vacation, because that's what happened to Taylor and my family too.
Well, in the meantime, we just want to get to another couple stories. Shanghai outbreak swells as the first subvariant case is detected there. So China is still struggling. And then you had the Wuhan University finding a cholera case, fueling fears of spread. So that's another thing. And that's where, right, COVID started in that area. So
yeah, the district's health department there said it has collected samples, undertaken contact tracing, and closed some venues, Carol, for disinfection after the student was found to have the disease.
Then there's monkeypox. So enjoy your summer, everyone. I'm sorry. I'm really sorry. I know it feels like a terrible Monday. This is Bloomberg.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelota. Slide in tech megacaps continues to weigh on trading, even though gains in defensive shares like utilities and consumer staples push the S&P 500 away from session lows. The S&P is down 32 now, a drop of 0.8%. The Dow is down 65, down 0.2%. Nasdaq is down 205, a decline of 1.8%. 10 years up 23.30 seconds, 10-year yield 2.99%, the 2-year yield 3.07%, spot gold down 0.5%, 17.34 the ounce, while West Texas Intermediate crude is down 0.6%, 104.20 for a barrel of WTI. Again, recapping the Dow, the S&P, Nasdaq are all lower. S&P down 32, down 0.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. Well, having just got over back-to-back COVID cases and Tim had to deal with it with his family, I got to say that I think this story about the next variant that might bring us all down definitely got our attention, Tim, right?
Wouldn't it be nice, Carol, if there were some sort of technology that could predict the behavior of this virus? Well, it's something that Riley Griffin writes all about. It's a startup tapping AI to predict COVID variants. Riley is U.S. healthcare reporter for Bloomberg News. Also with us this afternoon is Joel Weber, the editor of Bloomberg Business Week. He's with us here in the Bloomberg Interactive Brokers studio. Joel, as you heard, I was just saying it would be nice if there were some sort of technology that could predict the path of this virus, so it doesn't seem like we're a step behind every time a new variant pokes its head up.
It almost seems too good to be true, but when you take massive data sets and put it into machine learning, maybe artificial intelligence can help tell us where things are going. And there's a startup that actually hopes to do exactly that, right, Riley? So how realistic is this, and who's the player?
Yeah, the player at hand is A Priori Bio. They're actually backed by a company called Flagship Pioneering, which was the incubator behind Moderna, a name you might hear now. And they've developed this technology that they say can be used to variant-proof vaccines and therapeutics, or provide an early warning to governments about the dangerous mutations are to come, just like a hurricane alert. They've spent 2 years in stealth mode building out this technology and trying it against COVID, and they suggest it works. And they aim to partner not just with the pharmaceutical industry, but with public sector partners like the CDC. So we still have to see what products they might bring to bear or what information they've been sharing. But they launched just today with $50 million in funding from Flagship.
Riley, I got to ask, past 2 years seems like a time that you might not have wanted to be so quiet about this. Though, there's the pandemic.
Exactly, that's what I was thinking. Like,
people have died. Like, so why the really long quiet period?
Yeah, just to hone the technology. This has been something they've been looking at with each COVID-19 variant. So basically, they take the sequence of the virus and they can plug it in and assess what they describe as synthetic variants. So using the computer, they're trying all these different potential variants out and assessing how they would bind to human antibodies. And as we know over the last 2 years, viruses are wily things. They mutate order to survive, and these mutations can evade the defenses we've either created via natural infection or by vaccine. So it's really important to not just know what viruses and variants could exist, but know how they will behave. And that's how they ultimately will design these variant-proof drugs and vaccines. Why have they been operating in stealth? To really ensure that that technology is up to the task and that they can apply it not just to COVID, but to other viruses like HIV and influenza.
So that's where they're at this point, correct?
That's exactly where they're at this point. They're certainly going to be looking for more funding down the line, but Flagship's a really interesting company, and they're known for doing this. They take, $20-50 million. They deploy it to a company they've created, and then they watch it flourish. And we've seen that prove successful in the case of Moderna. I think now will be a test for A Priori. We're going to have to see where they go, but this is just the beginning.
Okay, with great power comes great responsibility, as we all know from Spider-Man. Joel's, I'm getting a good Joel. I'm getting a good laugh from Joel. Thank you, Joel. I appreciate that. But it makes me think of, okay, if this can be used for good to help us predict where viruses are going, could there be biosecurity threats with this type of technology as well?
It's the very same question I had for the co-founder and CEO. I think we all need to be attuned to these questions of biosecurity risks as we enter this biotech revolution with more information than ever and the ability to essentially come up with a synthetic variant that could be dangerous and damaging. You gotta wonder if that were in the hands of a nefarious actor, what could happen. A priori says that they've been focused on that question from the very beginning, since the time they realized they could make these biologically meaningful predictions, and that they've partnered with external experts to implement, test, and stand up that security. And they caution to me again and again, remember, we're not working with viral material. We're not in a lab with the literal virus itself. They are plugging these data points into a computer and assessing and modeling with machine learning.
I can almost picture the Green Goblin there in town. Okay, so Riley, I wanted to ask. It feels like we've been playing from behind for I don't know, 2.5 years now. Is there a chance that this company could maybe help us play from ahead for once?
I think that's the hope, and we got to see what the government does as well, because at the end of the day, a lot of our response comes through public-private partnership. Right now, we're seeing a stalling of interest from Congress in the immediate pandemic response. There's been quite a debacle between the White House and Congress over funding to do this kind of work, really pandemic prep, not immediate deploying of vaccines to people, but thinking through what could come next. And all the demands for billions in funding to do that longer-term pandemic prep really hasn't gotten much momentum. So we're seeing efforts come out of the private sector, but I think we really got to ask ourselves, is the public sector bought into?
So I feel like I've seen this movie before where somebody may have the answer to providing a better trajectory for a way out of this. And yet, right, like I remember years ago, right, Business Week covered it, right? The research in terms of COVID, like it was out there and it just needed some money to kind of cultivate it. So are we kind of going through that again, and shame on our government?
We're focused on that longer pandemic prep. The White House has this pandemic innovation task force. They're really supposed to do just this. Think about what technologies can be used to improve disease surveillance and response. We don't want to be responding in real time to pandemic threats. We want to suss them out from the beginning, monitor them, account for data, and respond before they really spread. Containment. Again, with monkeypox, this is another thing that we've got to watch quite closely and see, have we taken lessons learned from COVID and applied them to other threats that exist in this ecosystem? This is a company aiming to do it. I think we're seeing biotech take some interest and see a market opportunity, but time will tell. And let's have this conversation in a year and see where we've ended up.
Well, that was my question. Do we have to wait that long? For day one of the company right now, when do we think, what does the horizon kind of look like here?
And Riley, just about 20 seconds.
We really need to get a sense of what the partnerships that will ultimately form look like. Are they going to collaborate with the CDC? Will we see new partnerships with other companies out there? I mean, they've got the information, but really it's what you do with this information that matters. So I have a sense that some of those partnerships are already forming. They're not ready to announce them yet, but let's stay tuned.
No pressure, AI. Just come through for once already.
Please. Riley Griffin and Joel Weber, of course, of our Business Week team. This is Bloomberg.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in your trading session. Caroline Hyde, Romain Bostic, Taylor Riggs. We're joined now by our colleagues, Carol Massar, Tim Stenovic, as we welcome cross audiences as we do day in, day out TV, radio, YouTube to dissect what is a risk-off kind of a day, Carol.
Yeah, totally, right? No conviction, not a lot of volume here in today's trade, even as stocks try to come off their lows. Once again, don't roll your eyes, guys, but I'm going to look at Chinese shares that trade in the United States, down almost 7% in today's session. You had a couple things going on. Alibaba and Tencent, we saw a big sell-off overnight, two firms receiving a regulatory fine on past transactions. Then you've got a COVID outbreak, fresh one in Shanghai. So you've got renewed concerns about lockdowns. All I keep thinking about is the pressure on China, the pressure on Europe because of energy and higher inflation and costs. Does it start to make the U.S. market, maybe by comparison, look better? We'll see whether or not investors start to decide, Tim.
Well, Carol, those COVID concerns are weighing on the region, specifically casinos and companies that do business in Macau. If you take a look at the S&P 500 index that covers casinos, it's down more than 4% today. Casino stocks among the worst performers in the S&P. You've got Wynn Resorts down. You've got Las Vegas Sands down, each more than 6% today. This because of authorities in Macau have shut almost all businesses as a COVID-19 outbreak in the area continued to worsen.
Not money rolling of the dice happening in casinos, not much money being played in this market either. I mean, you're so right, Carol, looking at volumes, really pathetic. Although I stood for a long time trying to get my salad today at lunch, so more people are in Manhattan than I realized. But I'm looking down 1% on the S&P 500, 40 points and a half on the downside. Dow Jones off by 0.4% on the overall index there, 130 points lower. NASDAQ, big tech, though, feels the pain. We're off by more than 2%, Elon. And Russell 2000, 1.8% lower as well.
It is a bond story type of day when you take a look at the composition within the equity markets. Utilities and real estate are the only two sectors remain here in the green, and that is because, well, bond price higher, yield lower. To the downside, that tells the classic sort of risk-off trade that is today. Energy, tech, discretionary, you're off anywhere from 1% to 2.5%.
Yeah, and you're seeing that reflected in the airlines. American Airlines down pretty sharply on the day, down by about 4%. In fact, most of the travel and leisure stocks are moving lower. Hotels, cruise lines, airlines as well. And then we talk, of course, about that Twitter deal, some reverberations here. A lot of people now is just taking a broader look, I think, at the social media space and wondering if some of those valuations hold up, particularly in light, not just of that deal failing, but with some of the issues raised about bots and everything else. You throw in a recessionary environment and maybe you look at a Snap and a Pinterest a little bit differently than you would have maybe a few months ago there. And one of the few bright spots here on this day is in that defensive sector. Procter & Gamble, Kimberly-Clark, a lot of those consumer staples to the upside here on this day.
Meanwhile, I mean, we've talked about it plenty on whether or not we are seeing, well, the talking into a recession, whether it be what we start to hear out of those earnings that become thick and fast as soon as, well, tomorrow with PepsiCo and then on to the likes of Delta Airlines. But I'm looking at what's happening in terms of the number of times us in the media are using the good old buzzword recession. It is climbing, folks, up to about 8,000 times at the moment in terms of how much we're starting to, well, pay some lip service to it. So it's the highest that we've seen since 2020.
All right, make it 8,001 because I'm going to say recession again because that is certainly something that Lee Cooperman talked about with our surveillance gang earlier this morning. He's, of course, the chair, founder, CEO of his Omega family office. He said there's three things that basically get us to recession. Here's what he had to say.
I think that ultimately the price of oil or the Fed or maybe the strong dollar will lead us into a recession. And when the recession hits, which will be a 2023 event when it hits, not 2022, that the market will find the bottom somewhere between 35 and 40% below its peak of 4,800.
All right, again, Lee Cooperman earlier on surveillance, of course, of the Omega family office. But this gets to the point, do we ultimately get a recession? I know we did a show of hands on Friday. Caroline, you and I thought there could be a recession, but it also could be a very touch-and-go recession, Romain, and we'll have to see how deep or how painful it ultimately is.
I think you're starting to get a little bit more consensus again about, yes, the recession is going to happen, if not already happening, but I think you hit it right on the head, Carol. There's a lot of disagreement as to the severity and the longevity of it. And I do want to point point out, I mean, kind of to Leon Cooperman's point too, the idea that you're actually now starting to get a little bit of a drip of analysts and strategists sort of bringing down, whether it's their price targets or their EPS targets. We actually heard from some of the analysts over at Deutsche Bank, which have actually now lowered their S&P 500 forecast with regards to earnings, bringing it down just slightly. And we had Tracy McMillan over at the Wells Fargo Investment Institute, which actually shed light that they've now taken down their target for S&P earnings for the full year down to $200 per share, which is actually the lowest, at least amongst the strategists that we track here at Bloomberg. So I think that's coming down. I don't know if we have a sound of her saying that, but let's take a listen as to what she had to say.
We do see the need for analyst expectations to come down for earnings for the full year. In fact, we just revised down our earnings to $200 per share for the S&P 500, and that is significantly below where the bottoms-up analysts are on Wall Street right now. We do think that they're going to be cutting Q3 and Q4 estimates, and that they're likely to be following management here rather than leading management.
Tracy McMillan there of the Wells Fargo Investment Institute talking about bringing their price target down, earnings target, I should say, down to $200 a share. Tim, Carol, I mean, we're talking about an average estimate right now on the street is still right around $229, $230.
I hope more than bring it down, because that to me will then signal the bottom. It's like when everybody jumps on board and says, okay, it's going to be really negative. I want more of that negative tone, to be quite honest.
Really?
Well, what you want is conviction, though, right, Carol? You want an understanding, because there is so much that out there that's unknown right now. There's so many different ways that this could go. But look, I think an important part of the conversation here is that recessions recessions happen. They are a normal part of economic cycles. We can't always be in an expansionary. And I think what's up for debate is when that happens. Is it 2022? Is it 2023? Is it 2024? Because, folks, there is a recession coming. We just don't know when, and we don't know how deep.
Yeah, and also when we get the data to chew on throughout the week, we've not only got how worried CEOs are going to be in their earnings, but we're also going to get the inflation data, the CPI on Wednesday. We get, well, not only some economic data coming out of China, a big dump, the retail sales will also shed light coming on Friday, and how much basically the price of gasoline has been curtailing everything.
And you bring up a good point, Caroline, in sort of this higher inflationary world. Could it be equity prices are lower on recession, or is it the simple math that if a Fed's moving 75, you have to raise that discount rate? Things aren't worth what they were a year ago when rates are at zero. Could be also that simple.
Yeah, or they lower on sentiment as well. And Mike McKee saying that University of Michigan report and sentiment, investor psychology, all of that will be really important in terms of how things go ultimately going forward. All right, guys, we're going to be back in less than an hour's time. Our cross-platform coverage, we call it Beyond the Bell. We're going to count you down to the market close on radio, TV, and YouTube. So we'll be back in just an hour's time.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week and watching us on YouTube. Carol Massar, Tim Stenovic. You know, it's interesting. We didn't get to it with our TV colleagues, but maybe we will when we come back for Beyond the Bell. But you've got Citi and Morgan Stanley out disagreeing on the earnings impact for U.S. stocks. They're split over whether earnings can provide the much-needed fuel for U.S. equities in the second half of the year.
Yeah.
I think it's
Doesn't
hard
that make
to
a
tell.
market?
Yeah, that makes absolutely buy, sell, right? That's
Exactly.
how it plays out. And I do think
Citi's more optimistic here, by the way.
They're
Morgan
more-
Stanley, they've got Mike Wilson, who's notoriously bearish. But Citi coming out and saying that we could see a rally in the second half of the year.
when I think about, too, when the strategists, lay out their targets, and I said to remain, I do, when I feel like there's more negativity, that to me will be probably a signal of a bottom that they all pile on. And I have a lot of respect for strategists. I don't know that a lot of them get it right. Ultimately, right, in terms of projections, it's a tough one. But I think if you get a trend in terms of more negative sentiment or more positive, that helps you kind of get a feel of where things maybe are going.
You know what I love? At the end of every year, we go back to the predictions that
I love that
these analysts made
got it right?
for the S&P 500, and who got it right and who got it wrong. Because look, nobody sees this stuff coming. Let's take a step back, Carol, right?
It's not an exact science.
It's not. And look at how the Fed got inflation wrong. And some people were right about that, but those same people have been wrong about other things. I mean, it's important to keep that stuff in mind. Hey, before we go, Carol.
Sure.
Pepsi, fast to know. Delta Airlines, Cintas. We got JP Morgan. We got Morgan Stanley. We got PNC. We got State Street, Citi, Bank of America, Schwab, Goldman Sachs, IBM. Did I say BlackRock, Wells Fargo?
Yeah, so a lot of financials, right? The big banks, we get from them, and it'll carry over into next week as well. Commentary is going to be key. Visibility is going to be key. Like sentiment, if I feel like that we're hearing a lot of negative sentiment, then they could be worried about things slowing down. And as you said, we're going to get a recession. I think it's maybe not this year, but maybe more like early next year, and maybe it'll be already done before we know we went through it.
Ooh, I like the sound of that. Let's get to world and national news with Nancy Lyons in D.C. Hey, Nance.
Thanks, Tim. President Biden is touting the new bipartisan gun legislation that passed Congress in the wake of those shootings in Uvalde, Texas, and Buffalo, New York. He spoke directly to those gathered in the Rose Garden today who lost a loved one due to violence.
I've spent so much time with so many of you over the years that we've actually become personal friends. And I can't thank you enough for your willingness to continue to fight for other families. Nothing can bring back your loved ones, but you did it to make sure that other families don't have to experience the same loss and pain that you've experienced.
The president says the law should be a call to action to do even more. A new Pew Research poll finds about 2/3 of Americans approve of the new gun law, but 78% of respondents believe the legislation will do little or nothing at all to reduce gun violence. Well, for the first time, a drug company is asking for permission to sell a birth control pill over the counter.
Paris-based HRA Pharma is applying to the Food and Drug Administration for over-the-counter sales. The move comes weeks after the Supreme Court's decision to overturn Roe v. Wade. Kelly Blanchard is president of IBIS Reproductive Health, which helped with the application. She says the move will especially help low-income people.
Up to 30% of people who are trying to access their contraception by getting a prescription face barriers.
As for the timing so close to the Supreme Court decision, HRA Pharma says it's a, quote, really sad coincidence. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Gotcha. Nancy Lyons, thank you so much in our 99.1 newsroom in Washington, D.C. So a couple of stories from the M&A world. First of all, from our own Sri Natarajan, who I walked in with this morning down our circular escalator, and I was talking to him about his world. He's got a story out that says Morgan Stanley picked 2 of its top bankers to lead the deal-making group in a leadership shuffle atop one of the biggest banking franchises on Wall Street.
Yeah. I'm sorry. I didn't have my microphone on, Carol.
You've only been doing this for 2 years.
We're talking about 2 people, Eli Gross and Simon Smith. They've been promoted to run the global investment banking division, according to a memo to staff on Monday, seen by Bloomberg News. The pair is going to replace Susie Huang and Mark Eichhorn, who will become executive chairs and lead a newly formed group of senior bankers that drive strategic deal-making. This story, as Carol mentioned, an exclusive from Bloomberg's Sri Natarajan.
Yeah, and the timing is kind of interesting because it's a critical time for the investment banking business, which has seen its fortunes fluctuate amid market volatility, fears of a looming economic slowdown. You know, it's the things Tim and I talk about on a daily basis. Some numbers for you. Global merger volume dropped about 17% through the first 6 months of the year on the heels of the busiest spell ever in M&A activity. Keep in mind, we're coming off a couple of record years, so we've seen some slowdown. At the same time, I just want to bring you a story from Liana Baker. It isn't the first time billionaire Tesla founder Elon Musk burned his investment bankers on deals, and it may not be the last. When Musk dropped that regulatory filing late Friday saying he was walking away from his deal to buy Twitter, some of the bankers who were backing him felt a mixture of disappointment and relief, even with millions of dollars in fees at risk, according to those familiar. But I guess bankers are looking past it because they'll say there'll be more to come.
Yeah, listen to this comment from Susan Wolford, a former investment banker who was vice chair and ran the tech group at Bank of Montreal. Quote, he did burn bankers for tons of time. You have to take this to committee. You have to do all the work for something that large. End quote. Well, Musk has said he's walking away. Twitter has vowed to keep the deal alive and has threatened legal action.
Yeah, it's interesting. The bankers apparently didn't seem to have a heads up either to that the filing was coming. Anyway, it's a great ride.
I can't get over this.
Wait. Hashtag classic Elon.
Yeah.
All right, this is Bloomberg Radio.
hits, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got stocks lower across the board, red on the screen. Let's head right over to the first word breaking news desk for today's afternoon call. Here is Bill Maloney.
And good afternoon, Charlie. U.S. stocks heavy late in the day here with the Dow currently down 176 points. Was positive at one point. S&Ps are down 45, while the NASDAQ declines by 254. The U.S. 10-year yield at 2.98%. Gold is down 8. Oil is in the red. And Bitcoin is down by 2.2%. Among the main 11 S&P sectors, only utilities and real estate were in the green. And leaders to the upside in the Dow, Merck and Visa, while Disney, Caterpillar, and Nike led to the downside. In deal news, Amazon is said to consider bidding for Metro India. It could be a $1.2 billion deal. And in other news, Rivian Automotive plans to cut about 5% of the workforce. Wrapping things up, PriceSmart reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, I thank you very much, Bill. And to hear live breaking news over your Bloomberg Type Squawk, SQUAWK on your terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Friday's strong jobs report showed us once again the strength of the U.S. labor market, and yet recent gains in U.S. payrolls, including a stronger than expected June advance, probably exaggerate current employment growth. This is not, according to me, according to somebody much smarter than me, and we're talking about Goldman Sachs chief economist Jan Hatzius. He put out a note today. Tim, what's interesting is he pointed to the Labor Department's separate survey of households, which showed a 315,000 drop in June employment, and that source of data showed employment has fallen by about 116,000 on average over the past 3 months. He also pointed to declines in job vacancies and quits, higher jobless claims, weaker employment indexes and industry surveys, as well as scattered reports from companies about hiring freezes and slowdowns. And I think about Rivian cutting some workers today.
Yeah, that story from Ed Ludlow just crossing a little bit ago. That's why we like to turn to people who are in the industry to get a really good idea of what they're seeing on their platforms. We go to Julia Pollack, chief economist at ZipRecruiter. ZipRecruiter has job seekers and employers who are looking for jobs. So ZipRecruiter and Julia have a great idea about what's actually happening out there in the economy. Julia, good to have you back with us. How would you characterize the job market right now?
So I think we have an interesting situation where, despite so much taking place in the last 4 months, according to the establishment survey anyway, amazingly, job gains have been quite resilient and steady. That said, of course, there are some caveats. There are the economic data are mixed, and it's not 100% clear what's going on. But it is clear that we're not in a deep recession anyway. If this is a recession, this is the strangest recession we've ever seen, where there are actually pretty solid job gains taking place across the economy. And where you have some industries pulling back a little bit, the most interest rate sensitive industries, but you also have a lot of industries still reopening, still recovering, and still growing.
What are you seeing at ZipRecruiter?
So we're seeing a little bit of softness in job postings. They've come down from their fall 2021 peak. We're also seeing that employers don't quite feel that they need to bend themselves into pretzels and contort themselves and do gymnastics to get candidates to sign on the dotted line
Interesting.
anymore. So the share of postings offering signing bonuses, for example, has fallen in half since 2021. And that's interesting because we saw the biggest increase in signing bonuses ever and an expansion in their use across industries, with employers feeling that they needed to pull out all kinds of gimmicks and do whatever it took to get candidates. And now they seem to be getting people without resorting to those tactics.
I think that's a fascinating part of this.
That's a big stat,
because,
I feel like.
For so much of the last year, Julia, we've heard about employees holding the cards or potential employees, workers holding the cards. It's played out in so many interesting ways, right? Like a hybrid work environment or remote only jobs, just companies coming out and essentially begging people to take these positions. I wonder what you're seeing on the job seeker side of things. And what I love about talking to you is you not only have insight into what employers are looking for when it comes to their postings, but also what type of jobs people are looking for and they're taking. So what are you seeing on that other side of the marketplace?
So we're seeing those numbers hold pretty steady. And we're seeing job seekers continue to be pretty confident and find success in their job searches. So, most job seekers have a couple of offers in their pockets that they can choose between. They don't feel financial pressure yet to take the very first offer. But for the first time in June, our future expectations index took a nosedive. So job seekers are still doing pretty well right now, but they are very worried about the future.
See, and this plays into, we talked with our Michael McKee earlier, who follows the international economy and policy, and said what's really going to be key in addition to the CPI print and the inflation print this week is the University of Michigan report on Friday and consumer expectations. And just the sentiment of how people are feeling about the outlook, and that plays into what you are seeing, that it's interesting to see that maybe people aren't as optimistic, right? Or their
sentiment.
Or
that
sentiment.
Is what is important.
Like that to me seems pretty significant. So do you feel like then we've rolled over or are rolling over, Julia, when it comes to kind of peak employment?
No, I think we're likely to get peak inflation in June. And I think we're going to be in a situation where we have a period of slower growth, but the Fed may manage to bring inflation down without causing major labor market pain. Right now, it looks like they may manage to sort of hit this straight down the fairway, and hopefully we'll see a slowdown in those job gains, but not a dramatic slowdown. So we'll have to keep these numbers in context. Basically, the private sector is fully recovered now. There are more people as of this last jobs report employed in the private sector than there were before COVID, which means that the jobs hole is basically closed. And so we should see job gains go back to a more normal level. 372,000 jobs added, that's more than twice the 2019 monthly average of 164,000. So these are still huge numbers, and there's quite a lot of room for the labor market to sort of edge back down to normal.
Yeah, we go back, Carol, to what we were talking about last week. With gains like we've seen every single month when it comes to payrolls, it's difficult to even imagine that we're in a recession right now.
Right, exactly. Like, how long does it take to work down kind of these types of gains? You can't just flip a switch and all of a sudden we're not seeing this kind of job creation. Julia, some interesting insight. Really appreciate it. Julia Pollack, she's chief economist at ZipRecruiter, joining us on the phone in Santa Monica, California. But I think what was interesting is about that whole idea that employers don't have to work so hard to bring in.
Yeah, I love the way Julia put it. She said employers don't need to do gymnastics anymore to get people to sign on the dotted line.
So no more fast food bonuses?
Maybe not for now.
Yeah. All right, you're listening to Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, I'm doing this through a cough drop because I'm still getting over COVID.
You sound good though, Carol. Last week it was like kind of touch and go, I'll be honest.
A little congested. Speaking of congested, we'll see what earnings are going to be like. Did you like that?
I like what you did that. Yeah, earnings can be congested. I mean, look, I'll tell you what, the outlook is congested. We don't know what's going to happen, and I think that's
fuzzy, right?
Yeah, really fuzzy. We're going to talk to Jess Metten about that in just a minute. First, though, Charlie Pellett, we got less than a half hour to go. How's it looking?
Indeed, 28 minutes to go. Red on the screen here. The Dow, the S&P, NASDAQ, all trading lower. Back to work Monday. Losses for the U.S. stock market. Right to the numbers. We'll give you the why in a moment here with the S&P down 43, a drop there of 1.1%. Dow down 161, drop there of 0.5%. NASDAQ, techs being hard hit today. The NASDAQ Composite Index down 242, a drop right now of just about 2.1%. Big tech names, NASDAQ 100 Index also down by 2.1%. 10-year is up 24.30 seconds. The 10-year yield 2.98%. The 2-year yield 3.06%. We've got gold down 0.5%, 17.33 the ounce, and West Texas Intermediate crude down $1.11 a barrel. 103.68, lower now by just about 1.1%. Wall Street's focus going to be squarely on earnings beginning Thursday when we hear from J.P. Morgan Chase and other big banks. As for the broader earnings picture, Victoria Green is Chief Investment Officer and founding partner at G Squared Private Wealth.
We are bearish on earnings, not to, winter is coming as kind of our theme here, because I don't think the numbers are going to be great. If you look at the inflationary pressures, the labor pressures, not much happened from Q1, and expectations in this year was that Q2 was going to be the hardest hit earnings, and then we might see a second half recovery. So I think we have a lot of headwinds.
And today, looking at congestion for those bank stocks, we've got the shares of J.P. Morgan Chase first out of the gate.
Nice.
It's a theme that hits personally as well. But just let me, J.P. Morgan Chase down 1.5%, Citigroup down 1.3%, and Wells Fargo ahead of earnings later in the week down 1.3%. Recapping S&P down 44, down 1.1%. Carol Massar, I miss you. That's a Bloomberg Business Flash.
Oh man, do we miss you,
Charlie?
Oh, you're very kind to say that.
Really miss you.
I can't tell you, and I've said it before. I can't tell you how much I hate working from home.
You and me both, Charlie.
I may be in the minority. I hate it.
I know, kiddo. We hate not having you around. One of the favorite things is when you walk through the newsroom. I gotta say, get better, get back here
and also
soon.
one more thing. Congratulations, Charlie Pellett, on 30 years at Bloomberg.
Coming up on 30. Who would have thunk? Anyway,
God, and you're
I
only
love what I
40
do.
years old, man. How'd you do that? We love you, kiddo. Get back here soon. All right, Charlie Pellett, of course, there. Right now, we want to get to our own Jess Metten because she's got a great story. It crossed on Sunday, and I gotta say, when it did, I was like, I know I want to do this on Monday. It's a perfect setup as we get ready for earnings that will happen this week. That earnings season getting underway.
Yeah, Jess is with us in the Bloomberg Interactive Brokers studio. She's equities reporter here at Bloomberg News. All right, Jess, this week we got a lot happening. We got Delta Airlines, we got Pepsi, we got all the big banks, we got some small banks too. What are investors and analysts going to be looking for recessionary?
There's one big
here?
question, right?
Right, and it has to do with those margin pressures, and especially when it comes to the bank, just looking what's happening with their net income margins, and also those banks that obviously cater more toward the consumer and how consumers are taking out loans, what that really says about the barometer of the economy. Clearly, looking at what's happening with mortgage rates, how that affects financing and housing, but then also with auto loans and credit cards. So it's a big barometer, and especially when these C-suite executives from the big banks, like say with Jamie Dimon just back in May when he sort of made the reference to about sort of this looming hurricane that
became the weather forecaster.
Right,
of
all these
forecasters.
forecasts, and then Brian Moynihan over at Bank of America taking the opposite type of stance and really signaling the strength of the consumer there. And Dimon did obviously hedge that and talked about how there was still strength in the consumer there, but it's going to be really interesting to see what the CEOs are saying about their outlooks moving forward, not just what happened in the second quarter, because that's obviously backward looking at this point, and a lot of strategists and analysts, they already know when I talk to them, it's probably not going to look that great. But looking ahead,
But there will be earnings growth,
right.
just not as like the strength that we've seen.
Exactly. And something that's really key when it comes to the banks is because of the loan losses. They had these loan reserves during the pandemic where they were setting money aside for potential losses that they were going to have. But then once parts of the economy started doing better, if you looked at what they're, say, in the first quarter of 2021 and the second quarter of there are these record profits. So when you're comparing those periods, say for this year compared to last year, it looks like there's going to be big losses there, but it's because of what was happening with those loan margins. So then moving forward, as we get toward more of the second half of this year and into next year, analysts don't think there's going to be as wide of a disparity when you're particularly looking at the banks. But overall, just looking at where earnings growth is, it's just over 4% for the second quarter, which would be down from 9% in the first 3 months of the year.
It's a big haircut. Hey, this story, what's great about it too, is you guys point out basically 5 factors that folks are going to be focusing on. So just quickly, if we can go, we've got about 2.5 minutes. Let's go through it. So one of them is inflation damage.
It is, and how that impacts sort of when we're talking about margin pressures, especially when it comes to consumer discretionary companies, retailers, but now it's spilling over into other sectors like communication services. So you'll have certain sectors that can hold up better than others. But say if you're just looking at operating margins, including energy, looks great. You take energy out, then margins are contracting. So that's the problem there. And energy is supposed to obviously have a really great second quarter, but then there are the question marks of now that we've seen oil briefly fall below $100 a barrel last week, but even just over the last month, looking at the S&P 500 energy sector, giving up more than 20%. You've seen the reverse with certain technology shares there, right? In growth stocks. So that's an interesting story with energy, not just, the gangbusters growth they could have for the second quarter, but what does that look like moving further out? And would it be even sustainable to continue to see oil potentially stay below $100 a barrel?
I want to jump around a little bit because there are 5 on here. Let's go to China here because this is a really important one, especially with the news that we're seeing today, additional COVID lockdowns. We see casinos that operate in Macau just taking a hit today. What do we need to watch for when it comes to the second largest economy in the world?
Exactly, and that really is a barometer for how much the global growth is going to be, and also when it comes to the sort of no COVID rules that they have there, how that impacts us. And especially this morning, the big news was obviously Twitter, but then looking at what's happening with those casino stocks, and especially sort of those types of corners of the market that really were hammered in the depths of the pandemic. So if they start struggling again, and especially what that says about consumer spending, what that means, and if that can have spillover effects to, say, Europe, the U.S., what that means there. So that's going to be a really key story beyond even just some of the other themes, because I think we've talked a lot about what's happening with inflation pressures and margins and things like that, but that is a key concern when you're looking at those other segments of the stock market.
Yeah, and I'm going to count how many times maybe people use the word recession when they go on their earnings calls, whether the executives, right? I mean, just got about 10 seconds, but that's going to be key.
It is, and margins were amongst, not surprisingly, one of the big key things that were mentioned in the first quarter earnings calls, even though supply chains kind of began to dial back a bit in those mentions. But again, it'll most likely be margin. It will be the key story.
Are analysts saying recession more than the executives? That's what I wonder when they're asking questions.
Oh, that's right. They asked them.
Yeah, I think they'll be asked about it.
Absolutely. We'll be playing the counting game. Jess, thank you so much. Jess Manton, equities reporter at Bloomberg News. Check out her story on the Bloomberg.
To Washington, D.C. we go to Nancy Lyons for an update on world and national news. Hey, Nance.
Thanks, Tim. President Biden is praising the passage of the first gun safety law in 30 years, inviting 80 members of Congress who worked on it to the White House today, as well as survivors of mass murders that were committed with weapons of war.
The president said guns are the #1 killer of children in the United States, and this law might have prevented some of the killing.
There's a right to bear arms, but we also have a right to live freely, without fear for our lives, in a grocery store, in a classroom, in a playground, at a house of worship, in a store, at a workplace, a nightclub, a festival, in our neighborhoods, in our streets.
The president called again for banning possession of assault weapons and penalizing gun owners who don't safely lock their weapons away. In Washington, Irv Chapman, Bloomberg Radio.
The next round of House January 6th hearings is coming up tomorrow. It will focus on right-wing groups and whether former President Trump incited them to attack the Capitol last year. Future hearings could be colored by testimony from Steve Bannon. The one-time Trump advisor has been cleared to talk to the panel after the former president waived any executive privilege. Bloomberg government's Bloomberg government reporter Emily Wilkins says Bannon will likely stay loyal to Trump.
Trump really wants someone to get in there and defend him. That is what, in his letter to Bannon, he really implied that Bannon needs to be able to do.
Bloomberg's Emily Wilkins. Bannon has also lost a court battle to move his criminal trial for contempt of Congress to later this fall. Today, a judge says he sees no reason for the delay, so the trial will begin next week. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Nancy Lyons, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. So, SPACs.
Yeah, they were really hot.
And then they were not.
Yeah, they weren't. Richard Branson, interestingly enough, has... This story, Carol, I saw it this morning. It's interesting because you don't necessarily see his name associated with a lot of the SPACs that he's been behind.
Yeah.
I follow someone on Instagram who works for Virgin Galactic. It's not Virgin Galactic, but it's the Virgin Group.
Yeah, yeah.
And he was always posting when he was at the NASDAQ for these IPOs. It was like 23andMe, for example, right? They were behind it.
So this is where their money's going. All right, so this story by Benjamin Stupples and Tom Maloney, you know, we all know who Richard Branson is, right? His various businesses. Turns out one of Wall Street's hottest pandemic plays is driving his wealth now, even as his and many other blank check firms, are slumming. And Tim and I have talked a lot about what's going on with SPACs. I mean, it was such a hot thing early in the year. Is it this year or last year? I can't even remember. Last year.
2020 was huge for SPACs, the end of 2020. Then 2021 was really big in the beginning.
Right, and then it just fell off a cliff.
Exactly.
So they've really been out of favor. But it turns out when it comes to Richard Branson, it's a very different story. He's, of course, the founder of the Virgin Group. He has been a serial user of U.S. special purpose acquisition companies, or SPACs, employing them to rapidly turn parts of his business empire into listed equities, as well as to buy stakes in companies such as 23andMe, which is what Tim just talked about.
Oh, we got Virgin Orbit on there. We got the Virgin Group Acquisition Corp 3. It's pending a listing. We got Grove Collaborative, which just last month, June 17th, merged with a Virgin SPAC. Carol, what would be the first SPAC that comes to mind that you heard of this round? Which is the first one that you remember hearing about?
I don't know.
It was, for me, Virgin Galactic.
Okay.
Polyhapatia. I had never heard of a SPAC before.
Yes.
They raised the funds for that blank check company. I was working on the floor of the New York Stock Exchange then, and look at what's happened since.
It's pretty remarkable. But anyway, a great read. Check it out at Bloomberg.com.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. Mega cap tech shares are tumbling. Companies like Tesla, Apple weighing heavily on trading. For example, we do have Tesla shares moving lower now by 6.3%. Twitter is down 10.5%, while Apple is lower now by 1.5%. The NASDAQ 100 index down 2.2%. The NASDAQ Composite Index also down 2.2%, close to the worst level right now with NASDAQ down 258. S&P is down 46, down 1.2%. Dow Industrials down 179, a drop there of 0.6%. 10 years up 21.30 seconds. The 10-year yield 3.00%. The 2-year yield 3.07%. Spot gold down $10 the ounce to $17.31, drop there of 0.6%. And West Texas Intermediate crude oil down 1%, 103.70 a barrel. So again, recapping, 12 minutes to go ahead of the close. The Dow, the S&P, NASDAQ all in the red. S&P down 45, down 1.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
TikTok, everybody. Just about 11 minutes left in today's trading session. We've been bouncing around. We're just off our lows of the session. The biggest hit to the NASDAQ, down about 2.25%, as you just heard from Charlie. So let's get to it with Alan Zaffron.
Yeah, we love it when Alan joins us. He's founding partner and co-CEO at IEQ Capital. He joins us this afternoon from Foster City, California. Alan, how are you?
Hey, doing great. Tim and Carol, how are the two of you today?
We're good. I don't know if
we're getting there.
We're getting there. We're, getting over COVID as
Yes.
one does in 2022, but all is good here. No complaints, Alan. Hey, here we are on the cusp of earnings season jumping off tomorrow. We got Pepsi and we got Delta Airlines coming up too. What do investors need to be focused on? Because we've been getting the economic data from the Fed, and we've been getting the commentary from the Fed. We've been getting economic data from various different points, and now we start to hear from the companies. What should we keep an eye on?
Got to keep an eye on whether companies believe that they can maintain their margins in a more inflationary environment. So which companies have the pricing fortitude to raise prices and not lose customers? And that is a challenge that we're going to see in the next several weeks whether it can hold up. That is the conundrum right now causing all the volatility in the market. It's the market's prices are determined by two things, the multiple you pay and the actual earnings. And what has been really odd thus far this year, despite prices being down, earnings estimates have been going up. And so analysts, for the moment, believe those earnings are going to remain in place. And if you believe that to be true, this market is cheap. It should be bought here. The question is, will guidance from the companies continue to illustrate 10% year-over-year growth in earnings for the S&P 500 this year and next year? That's what analysts are currently forecasting, but the market is very skeptical of that, and prices are down, anticipating profit forecasts to drop. That's what we have to watch for.
Yeah, right. This is going to be so key going forward. Alan, what do you make of some of the market rotation that we're seeing? I'm looking so far in July, your outperformers, we're looking at things like consumer discretionary, healthcare, information technology. We've seen, if you look at the S&P 500, the gains so far in July kind of underscore some of that sector rotation, tech and healthcare gaining ground at the expense of commodity industries. Energy at the bottom of the pack, so far down about 2% here in this month of July. What does some of that potentially tell you?
I take that rotation and I further it by watching the price of copper dropping 30%, the price of a 10-year treasury, the yield on a 10-year treasury dropping from almost 3.5 to 3, watching energy stocks plummeting, and it's telling me the market is now building in significant economic declines in growth, if not outright recession, and so the rotation makes sense because in a slow-growing or recessionary environment, growth stocks, those stocks that can grow regardless of the economic environment, are more likely to outperform. So the rotation, which we've seen now for about 6 weeks, is growth stocks are back in vogue. You wouldn't know that based on today's action in big cap tech stocks, and you wouldn't know that because growth stocks are falling as well. They're just not falling as much as value stocks, but it actually makes sense to me. We are looking forward at a slower growing economy, given what's happening with the Fed, given what's happened with a more heightened inflationary environment. And so it is a setup for growth stocks to outperform value stocks looking forward for quite some time.
So that's a sentiment trade, not an actuality trade.
No, it's actually, I think it's an actuality trade. Before COVID, we were in this really slow growth economy. After COVID, and after this Fed-induced slowdown or recession, we'll be back probably into a slow growth economy, which there's all these longer term secular trends, aging populations in the US and Europe and Japan, the rise of technological advances that are pushing out people's employment in different ways. There are these secular trends that lead to a slower, longer term growth rate economically. And in those kinds of environments, businesses that are not requiring strong economic growth, which are growth stocks, those are the stocks that will outperform. So I think in the intermediate to long term, and you're seeing it even now, people are rotating back into growth stocks. So that is likely to be a persistent trend.
So it sounds like we go to that slow growth economy that we had pre-pandemic. Is that what you're saying? Forgive me, Tim.
I do, with the big caveat.
Okay.
And the big caveat is the Fed's going to have to raise rates here from what's currently the Fed funds rate at 1 3/4, probably up to 3.5%. And they're going to have to do some demand destruction economically to slay inflation. And unfortunately, you're not likely to see the Fed cut rates anytime quickly, nor are you like to see a lot of fiscal stimulus from the federal government. So the recovery out of the slowdown is going to take longer than one might hope. This is going to be more of a U-shaped drop in recovery than a V-shaped drop in recovery. So we have to be patient. That's one of the differences here. You don't have the external stimulus. What's going to make the Fed blink is finally when you see unemployment claims rise dramatically. It turns out unemployment going up is sort of the last stage it gets you to the bottom of the recession when finally there's so much demand destruction that the Fed has to work on full employment and they cut rates again. That's when they blink. It's either that or it's you actually see somehow miraculously inflation is slayed without the unemployment claims jumping up. But that's not a high probability. So it's going to take time to get to that point. That's probably not until the first half of next year.
Alan, I'm visualizing this U-shaped recovery here. And I'm wondering, when you say recovery, what we're recovering from? Are you talking about a U-shaped recovery for the S&P 500? Are you talking about what is it? What is that?
Well, okay, so let's talk. Let's take a step back. Let me give you 3 scenarios. Remember that the stock market goes up on earnings and multiples. So if you look, the last 25 years, the stock market is traded at 16.5 times its forward earnings on average. And frankly, it probably should be a higher multiple today than it was 25 years ago. But if you give me that multiple, and if you believe current S&P earnings forecasts of $250 a share, we should be trading at 4,150 on the S&P right now, not 3,850. We could be up 8 to 10% by the end of the year. But most people don't believe that earnings estimate. So if you give me a scenario that growth slows, but we avoid a recession, historically, in a slowdown with no recession, earnings estimates get cut by about 5%. And so if you take that down, you get the S&P should trade to about 3,900, 16.5 times $238 a share. We're basically where we should be. The question is, if you really go into recession, historically earnings drop 14%. That gets you down to $200 per share. If you put a 16.5 multiple on that, that's 3,300. And God forbid we trade at a 13 to 15 times multiple, which can happen in a recession. You could go as far down as 2,600. I don't think we get anywhere near there.
Right.
But you could tell me we get a recession. And by the way, it's a modest recession because going into this, individuals and corporations actually are very strong balance sheets. It's the governments that are over indebted this time. So it's probably a more shallow recession, but you could trade into the 3,300, 3,500 area, which from here is still down about another 10%, but it's going to be slow and plodding. And
Well, this gets to
grind.
depth versus duration, right? So it might be shallow, but it might stick around and linger longer, and kind of like how COVID is, like the after effect. But what's interesting,
right.
that whole idea of the Fed blinking, they're going to be. It's not unusual to start thinking about when the Fed cuts rate, but you do get a feeling that they're going to hold off to make sure that they've really got inflation under control. Ellen, great things to think about as we get and we kick off this really important week when it comes to earnings and some economic data points. We've got to run. Ellen Zaffron, thank you as always, founding partner and co-CEO at IEQ Capital, on the phone from Foster City, California. Right now, it's time to head over to our TV colleagues and our TV team for Beyond the Bell, live on radio, TV, and YouTube. We are counting you down to the closing bell.
Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, and Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell, it's our global simulcast. We're joined right now by Tim Stenovic and the pride of New Jersey, Carol Masser. We welcome our audiences across Bloomberg Television, radio,
I
and
do love
YouTube.
New Jersey.
And oh, well, you tell me what's going on over there in New Jersey, because when I look at these markets here, not much going on here in New York, and I don't think anyone in New Jersey is buying either.
Well, okay, maybe that's the case, but God, heart New Jersey. It's not just about Newark Airport. I don't know. I think we're all trying to figure.
Got a lot of refineries too. Got a lot going on.
There's also horse country, beautiful
Easy.
beaches.
Carol will go after you here.
Skiing.
Go take this battle back to Twitter.
Oh my God, we are going to go back to Twitter. We've talked about this. You've talked about this. Airlines, a lot of hospitality, down on some concerns about China, but also, about COVID. So we definitely have seen those sectors really under pressure. Help me out, Tim.
Well, look, volume low once again. Are we all still on vacation here? S&P 500 volume down 25% compared to the average over the last 20 days, Caroline.
Yeah, it really is. Thin volumes, but also whether this is just bracing ourselves for, well, the storm that's yet to come. Remember, the man who called this an economic hurricane approaching, Jamie Dimon, he's going to be giving his earnings as soon as Thursday, but we've got so many earnings to pass, so much economic data. No wonder perhaps we're just going into this market a little selectively this morning.
It certainly feels selective and rolling over to the lows of the day. One thing, though, that has been consistent, and I bring this up every day, so no surprise here. Bond yields have been lower, and they've been lower sort of classically throughout the day.
I didn't know where you're going with that.
Yeah.
You bring up Real Housewives every day, so I was like, what does this have to do with the
What's not to love about that?
All right, well, folks, we're getting the closing bells here to start the week. Remember, we had a pretty decent rally last week, but again, heading into a week where we're going to get a big CPI report and earnings. Not a whole lot of love going on. The Dow Jones Industrial Average down by about 0.5%. The S&P 500 going to finish down by about 1%. Meanwhile, the Nasdaq Composite is down by 2.2%, and the Russell 2000 is going to finish the day down, Carol, by about 2.1%.
Romaine, I usually like to talk about the winners, losers of S&P 500, the split among those names. I got to look at the Nasdaq 100, though, because you know what, Taylor? Nothing was up. 97 names lower, 5 up. I mean, you just couldn't find any real gainers, it feels like, in the tech universe.
Yeah, that's really interesting. I'm glad that you bring up sort of the tech index leading the losses here. You certainly see that a little bit on the composition level as well for the radio audiences we do every day, the best performers and the worst performers by a lot of the individual sectors. And Carol, you're spot on when you think about only 4 of these sectors in the green, and really the highest utilities up 0.6%, hardly screaming a buy signal here. Household products, of course, and real estate, sort of a classic big mover when bond yields are falling. Let me lead you down to the bottom of the screen, because Carol, you sort of rightly set us up when you're thinking about energy, technology, some of the semiconductors, those media and entertainment, and of course autos. Those are off anywhere from about 1 to 2 to all the way 6% lower on the day.
All right, the Golden Dragon China Index I like to talk about, falling 7.1%. The most since May of 9th, so definitely seeing some pressure. All right, let's get to some of the gainers. We talked a lot about Twitter and Tesla today. Well, here's maybe a consequence of all that news. DWAC, DWAC, the Digital World Acquisition Corporation. This is the SPAC tied to former President Donald Trump. It is merging with Trump's media venture. Well, it soared after Elon Musk dumped that Twitter bid. Even warrants alone tied to the SPAC spiking as much as 60%, but this was up 20% in today's trade. Looking for some gainers in the S&P 500, Merck Merck was among them, up about 1.6% in today's trade. Not really sure why. We know over the last week that they are in advanced talks to buy Seagen, according to those in the know. So that's kind of floating out there. And then one more I want to mention. It's a small cap, about $685 million market cap. This one rallying big time. We're talking about Pliant Therapeutics, ticker is PLRX, up 159%. Don't laugh.
No, I was keeping an eye on this.
I know.
I want to point out, too, I mean, it's up 159%. There's actually some news floating on the wire right now. They're taking advantage of that price spike to sell common stock, 150 million worth. So the shares down in the aftermarket by 5%. So still 159 minus 5%.
And just quickly, because we care about the reasons why, the jump, the company releasing lung disease clinical trial data, and RBC analysts saying that the stronger than expected overall data set provides a major de-risking step for potentially achieving a future $1.5 billion market cap opportunity and transforming the story. So nonetheless, investors moving in.
Okay, let's go over to the decliners and talk Twitter, the worst performer in the S&P 500 on a percentage basis, having its biggest single-day drop since April of 2021, so more than a year. This after late Friday, Elon Musk saying he was walking away from that $44 billion deal. You know what's interesting is the shares didn't even trade close to 54.20. Haven't traded there for quite a bit of time and didn't even reach that.
What did Matt Levine say?
When he announced it.
No one ever bought into this. But I guess the question
I know, and I've talked about it for months and said the delta between, where it's actually trading and $54.20, like that shows that the market doesn't buy this.
They don't buy it, and I guess the big question I have now, Tim, is at what 32.65 the close today is what is sort of an appropriate value. And I think a lot of people were sort of worried that if the deal fell through, that 30, 40 bucks a share really wasn't going to hold. You wonder how low it can go.
All right. Well, anyone's guess is what happens next. All we know is that certainly lawyers will be getting paid a lot as they hash this out in Delaware.
Always win. I've learned that in my career.
All right, law school next time, guys. That's what's going to happen.
Yeah, or private equity.
That's a good point. Las Vegas Sands, among the worst performers in the S&P 500 on a percentage basis as well, down 6.3%. Authorities in Macau shutting almost all businesses as COVID-19 outbreak there in the area. Worse than nearly 70% of Las Vegas Sands revenue in 2021 came from Macau. And this is an interesting one. Uber finished it down by more than 5%. They took a hit today after reports about its lobbying practices. Now, this was from the earlier years of Uber, 2013 to 2017. Reports from outlets including The Guardian and Le Monde said that Uber allegedly received assistance from politicians, including French President Emmanuel Macron. We should note that Uber did say in a statement that there's been no shortage of reporting on Uber's mistakes prior to 2017. And the company pointed out a turnaround under CEO Dara Khosrowshahi.
And Tim, I just want to go back to what you're talking about with Las Vegas Sands and, of course, some of the shutdowns that we're seeing once again over in China and the worry there. That has been fueling perhaps the drop that we're seeing in WTI crude. Once again, we go to the demand side of the equation and also kind of the risk-off tone. WTI crude down by more than a percentage point on the day. Not true, though, of natural gas prices shooting higher in the US, up more than 7% as we see a heat wave upon us, and particularly, therefore, us all cranking up some of the help to try and keep us cool with the air conditioning units. I'm looking at also, of course, oil actually coming down over in Europe as we worry about, gas actually coming down in Europe, but we do worry more ultimately about Russia turning the screws on Europe and in their ability to, of course, withstand that sort of energy crisis. That's why we see the euro continuing to weaken against the US dollar, 1.4% weakening. We're now at basically almost parity, $1.0045 is where we're currently standing. So keep a close eye on whether we do hit that overall parity level as we worry about the European economy. We therefore see the risk aversion that's overall in the market power up the Bloomberg US dollar index once again up a percentage point. This time, the highest since March 2020 in the depths of the COVID crisis. Risk aversion means the Aussie dollar and Kiwi dollar, they all weaken. Watch out for what the New Zealand Central Bank does this week. And indeed, I'm looking overall at risk aversion that meant that bond markets got a bid across Europe. Greek yields falling 17 basis points. We saw Finnish yields, Danish yields, you name it, all really a flight to safety today, Taylor.
And you really saw that in full faith and credit here as well. Pretty much bonds catching a bid pretty much across the curve. There's a really solid 3-year auction, which I think, Carol, was notable given all of the CPI data and some of the volatility coming from this Federal Reserve. So the fact that buyers were interested in this market maybe signals something. Overall, though, we're pretty much in a range. I mean, we talk about the 10-year that we've been between a 280 and a 320 for the last couple months.
All right, so let's talk about the economic news to come this week. We know it's going to be a big week also when we get those bank earnings and we start to get an idea of what the bank CEOs have to say. But we're going to get reads, of course, the CPI print, the PPI print. We're going to hear about retail sales. And then as we heard, actually our Mike McKee kind of talking to us earlier and just talking about the importance of that University of Michigan Sentiment Index, about what's on the minds of consumers and how they feel about the outlook. Did I stop you guys?
Yeah. No,
We're shocked and awed by
I
what
thought
you
you
were
were
saying.
playing sound from Mike or something. But I mean, look, the whole discussion that we had, it was a couple months ago, and everybody was thinking, okay, we finally hit peak inflation. I mean, the fact that you have folks coming in at 8.8%, at least on that headline number, and I was looking at the lowest estimate. The lowest estimate right now in the Bloomberg survey is 8.1. So no one really thinks that we're going to, be anywhere near peak. Look, it's.
Well, Alan Zaffron from IEQ Capital, we just had a chat with him, and one thing that I found interesting about what he said is that when there is some sort of recovery from this process, we're going to see the fiscal response really muted because they want to make sure that inflation comes down. So if there is some sort of fiscal response to any sort of crisis that we see, it is going to be muted. So we need to get used to, on the other side of this, a very much slowing growth environment.
One of my favorite comments from Deutsche Bank, I think this morning, all about M2 money supply. What did they think was going to happen?
Yeah.
Even when they started pulling everything
the end
off?
goal? I don't know.
Yeah, I know.
Well, I don't know. To be fair, a lot of the writing about the financial crisis has said that they didn't go hard enough, and it left a lot of people behind in the recovery. So, they certainly, in hindsight, overdid it this time, but it seems like that they weren't able to meet in the middle, right?
All right. I guess that means we're going to have more to talk about tomorrow. All right. We got to run, guys. That's going to do it for our cross-platform coverage. Radio, TV, YouTube. We do it all. We call it Beyond the Bell. We will catch you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I think we're all feeling a little bit like a Monday.
Yeah, I was going to say like long COVID. I don't know, but it's not funny.
No, I think it's, it's a lot of questions, and we'll have to see. None of this is going to be exact in terms of it's going to be a big inflation print no matter what. It's
when
not
do
like
we start to see volumes turn around?
I think when we really feel like
everybody's just sitting back. The vacation last week was one thing, right? Holidays were one thing.
Like, we know investors have been moving into cash and out of equities, and I think it's not until we have some clarity about what comes next. And I think until we really feel like there's a rollover in inflation, it's going to take a while to bring down these numbers, even those hot employment numbers. And so I think until we start to see some definitive trend lines showing things are changing, I think this is where we're going to be with the markets.
All right, well, I want to be in Washington, D.C. now for check the latest world and national news. For that, we go to Nancy Lyons. Hey, Nance.
Thanks, Tim. President Biden is celebrating the passage of a bipartisan gun violence prevention bill. He welcomed lawmakers and families of victims to the White House today.
The provision of this new legislation is going to save lives, and it's proof that today's politics, we can come together on a bipartisan basis to get important things done, even on an issue as tough as guns.
The bill passed after recent gun rampages in Buffalo, New York, and Uvalde, Texas. Incrementally, it toughens requirements for young people to buy guns, denies firearms to more domestic abusers, and also helps local authorities temporarily take weapons from people judged to be dangerous. Firefighters are battling a wildfire in California's Yosemite National Park that's threatening a grove of giant sequoias that were first protected by President Lincoln back in 1864. Crews have soaked the grove with water to provide protection, especially for the biggest tree, the giant grizzly. Robbie Johnson is with the incident management team.
The fire did get into the grove a little bit, and it didn't get much further. And part of that is because there's been a history of prescribed fire in here to really create a fuel situation where there's not a lot to burn on the ground.
Johnson estimates that some of the trees are 1,000 years old. A new survey by the American Federation of Teachers finds more than 3 in 4 educators are not satisfied with their current work conditions. That's the most in 8 years. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy Lyons, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. Carol Masser, Tim Stenovic, live in our Bloomberg Interactive Broker studio on this Monday. Get ready, folks, for a lot of data points coming our way, economic and also from companies, the big banks as they start to report earnings, some other companies as well. Meantime, Barclays and B of A saying that card data point to weak consumer, a weak U.S. consumer in the month of June.
Okay, let's talk about Barclays first. So economists led by Pooja Srinam said that internal credit card numbers suggest that retail sales may have dropped 0.4% last month. That would be a second straight decline. This has, quote, led us to question if a sharper slowdown in consumer spending is around the corner. Carol, you mentioned earlier in our program a story. I didn't get to follow up with you, but it was a piece about whether people are talking a recession into existence. Was that Jared Dillion's, was it a Bloomberg Opinion column? Because Jared Dillion at Bloomberg Opinion, I read that this morning too. And it is really interesting because it's pay attention to what consumers do, not what they say. But if we feel like there is going to be some sort of slowdown, if things are going to get more expensive and we need to allocate our spending to a certain way, maybe we need to save more, that has serious economic repercussions. And Jared goes through them in his piece.
Yeah, absolutely. I mean, this is real stuff where sentiment becomes reality.
Yeah.
Bank of America also has said its own card data points to a 0.3% gain in spending per household for the month. We're talking about June. B of A economists saying gas prices, which hit a record high in June, are forcing consumers to cut back on other spending. The card data, this is a quote from that report, that B of A report, the card data suggests there is a risk that real inflation-adjusted consumer spending declined for the second consecutive month. So this is where, again, sentiment concerns, or just, Tim, as you say, it's real. Like, I think about it, if I'm spending X to fill up my gas tank, well, I need my car and I need to be able to go different places. Well, maybe I don't do Y.
Exactly.
And I think that's real. And
or you do what Walmart's CEO told us a few months ago. You trade down to generic products.
Absolutely. Or you do without about things that really aren't necessities. You really do. And that's why you're seeing consumer staples, and somewhat trade higher.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks slumped, traders positioning for a hot inflation reading and the start of a key earnings season that may provide clues as to whether the economy is heading toward a recession. Today we saw the Dow, the S&P, and NASDAQ all declining. Today the S&P 500 index fell by just about 45 points, down 1.1%. Dow Industrials down 164, lower by 0.5%, while the NASDAQ Composite Index was down 262, a drop there of just about 2.3%. So a down day today for the Dow, the S&P, and NASDAQ. Twitter shares closed 11% lower today. Twitter losing $3 billion in value as the Elon Musk legal battle looms. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, much appreciated, Charlie Pellet. So you're listening to Bloomberg Business Week. Carol Massar along with Tim
It's okay. We've only known each other for 2 years. It's okay.
Oh, my God. Help me, help
This
me.
is why I haven't been invited over for Friday pizza night at the Massar household.
Still working on who are you?
Exactly.
I adore. I'm so sorry.
That's okay.
On the Bloomberg, I'm going to switch gears.
I get my name wrong just to save you often, so
I get
don't
my
worry.
own name wrong. I get the company I work for after how many years? All right, on the Bloomberg terminal, we talked about this story. Jared Dillian, Bloomberg opinion columnist, he writes that Americans are talking themselves into a recession. We're already seeing that in the housing market, Tim. U.S. home sale cancellations jumping in June, roughly 60,000 deals falling through. That's about 15% of homes that entered into a contract, according to Redfin. So we're wondering what the consumer's up to.
Yeah, what is the consumer up to, especially ahead of Prime Day, and what's actually going on, with marketplace sellers when it comes to Prime Day? For that, we turn to Tom McGee, the president and CEO of ICSC. Tom joins us on the phone from Los Angeles. Tom, good to have you with us. You should note that ICSC promotes, as you write on the website, and elevates the marketplaces and spaces where people shop, dine, work, and play. So think brick and mortar here. Give us an idea, Tom, of what you're thinking and what you're seeing right now as we look across the economic landscape and try to get an understanding for the shifting way that people are spending money.
Well, good afternoon, and thanks for having me on. Hi, Tim. Hi, Carol.
Hi.
Good to be with you again. Look, I think the consumer has been exceptionally resilient over the course of, obviously, the last couple of months where inflation concerns have been, significant and heightened. I do think that we'll continue to see strong retail sales over the next, few months. You still have a high level of personal savings, and the job market is strong. But I think if inflation continues to be, front and center, and it continues to be at the levels that it is today, of course, at some point it's going to have a negative impact upon consumer spending. Right now, you still have those strong underlying, considerations to personal savings and jobs, and that's going to drive, continue to drive the spend, and that both in retail but also in experiences. I mean, it is the summertime, and we've all experienced and witnessed what's happening, with traffic at the airports and on planes, et cetera. So there's a lot of folks spending money on experiential type things, whether it's travel or going out to eat and doing the things that they like to do in the summer, and to a many extent haven't been able to do for the last couple of years.
Well, do you feel like, Tom, your members are feeling a little, like they're a little cautious looking at the second half of the year and maybe into 2024? Because I agree, Tim and I have spent more time in the airport than we have in the last couple of years in a big way.
Maybe they can convert some of the space, empty retail space around to bigger airports, because we are seriously bursting at the seams here.
Yeah, exactly. And so I wonder what your members are saying, that people would rather travel right now than maybe go buy some more clothes or stuff for the home.
Well, I think generally speaking, when people, in a normal environment, pre-COVID, pre-inflation concerns, et cetera, that, when you have a high level of travel and experiential type of spend, that generally was good for retail. I mean, when people are out and they're spending and they're vacationing, they're going to buy a lot of stuff, and that's generally good for retail. And of course, a lot of retail centers are, places where people go, and spend those experiential dollars. So I think generally speaking, that type of spend is not negative for retail. I mean, obviously, there's ebbs and flows as it relates to the time of the year and so forth. I think the level of concern, I think as it relates to the industry and the broader consumer is just that, the thing that we all have a level of concern around, which is inflation. And, if this continues at the current rate, that is, history is going to be our guide. And that's always been a negative over the long run for consumer spending and obviously for the economy. If we're able to get inflation under control, and the Fed's able to navigate a soft landing, that will, I think, and right now the consumer continues to be resilient and strong.
Hey, Tom, one thing I want to ask you, because there's a fair amount of stores just around Bloomberg headquarters in New York City that are still vacant.
There used to be more, I was going to say.
Yeah, Banana Republic, the Container Store. There's a lot of them that are gone. Talk to us about delinquency rates that play into the retail sector, CMBS loans, I'm thinking specifically. Are we seeing any kind of fallout?
Actually, that's improved dramatically, and you're really at, very, strong levels today. The level of delinquency has dropped. It's in the CMBS loan market. I think it's under 7% today. In June of 2020, that number was, approaching 20%. So that market has strengthened considerably, and quite frankly, rent collections as an industry are in the low 90%. I think 92% is the last number I saw as of a few days ago. So generally speaking, the industry is in very strong footing because consumers are spending and they're going out to shop at stores and they're going out to shop online. I mean, consumer spending has been strong. Now, you mentioned New York, and obviously New York is a particularly, it's a unique market, and it is, significantly impacted by what's happening in the broader, work environment and quite frankly the stresses around people coming back into the office. So it's that particularly Midtown, that's a big driver of retail spend. So New York is unique relative to the rest of the country.
Hey Tom, 30 seconds left. Weigh in on the power of Amazon Prime Day away from Amazon and how it has turned into a shopping day outside of Amazon too for your clients, your members.
Just really quickly.
Yeah, it's become an iconic shopping day, and so Target Deal Days and a whole host of other retailers are having similar type of events, and so it's become another iconic shopping day, just like Black Friday and other days in other parts of the year.
It's more than one day, right? It's like a couple days or something.
Yeah. It's now an event, Carol.
It's not.
It's an event.
I have been bombarded by offers.
What are you going to buy?
Things I must have.
What must have you have?
No.
What must you have?
Look away. That's what I'm doing. I got enough stuff in my life right now. Tom McGee, always a pleasure. President and CEO of ICSC on the phone from LA.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, this is Bloomberg Business Week. It is Monday, July 11th, 2022. Carol Masser, Tim Stenovic here in our Interactive Broker Studio. Coming up, we're going to talk about the hospitality industry, which we know took a bit of a beating today.
Yeah, but, it seems to be on the up and up in terms of demand. I'm eager to hear, though, what things are looking like in real time, because we know people are eager to get back out there.
All right, we're going to talk to the folks over at Crown Plaza Hotels and Resorts in just a moment. In the meantime, let's get back to someone we know who loves to travel, especially on the water, our own Charlie Pellet.
I do indeed. Here's what's going on. Lots of reservations on Wall Street today with the Dow, the S&P, and NASDAQ. Investors concerned about those hot inflation readings potentially coming up on Wednesday, and also the start of a key earnings season that may provide clues as to whether the economy is heading toward a recession. For now, though, it is all about earnings. We spoke moments ago with Alan Zafran, the co-CEO at IEQ Capital.
What has been really odd thus far this year, despite prices being down, earnings estimates have been going up. And so analysts, for the moment, believe those earnings are going to remain in place. And if you believe that to be true, this market is cheap. It should be bought here.
The S&P 500 index fell 45 points today, down 1.1%. Dow Industrials down 164, down 0.5. NASDAQ down 262, a drop there of 2.3%. 10 years up 24.30 seconds. 10-year yield 2.98%. The 2-year yield 3.06%. Spot gold down 0.5%, 17.33 the ounce. West Texas Intermediate crude down 1.2%, 103.54 a barrel on WTI. Earnings front and center this week. Later in the week, we'll be hearing from the big banks. J.P. Morgan Chase first out of the gate, down today by 1.3%. Then we hear from Citigroup, down 1.4%. Also reporting this week, Wells Fargo down by 1%. Recapping, S&P lower by 45, down 1.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Just want to mention shares of the Gap down about 1.7% in the after hours. We just saw a headline crossing the Bloomberg. The company's CEO, Sonia Singhal, two-step down at the company. So they're just announcing this, and it looks like they are announcing an appointment, but I don't have the full name right now.
Yeah, the news still crossing. We're going to bring that to you when we get it. But Carol, as you mentioned, shares of the company trading down in after hours, now 3.5%, bouncing around a bit.
And the company's executive chairman, Bob Martin, to serve as the Interapp Gap CEO. And they're naming Horacio Barbedo as president, CEO of Old Navy. So there's some stuff going down. Second quarter net sales down about high single-digit range. So we'll be tracking this one into the Tuesday trade. Stocks down 50% so far this year, Tim.
It's been brutal. Let's talk about getting out of the house, getting out of the apartment.
I'm up for that. Crown Plaza Hotels and Resorts, part of the publicly held and global hotel and hospitality brand IHG. We're talking about Intercontinental Hotels Group alone. Crown has about 400 open hotels globally in major cities, gateway cities, and also resort locations. They've got another 100 in the pipeline, Tim.
We got Ginger Taggart, Vice President of Brand Management for Global Crown Plaza Hotel and Resorts, joining us on the phone from Atlanta. Ginger, how are you?
I'm wonderful. It's a pleasure to be with you today.
It's great to have you with us. Hey, I want to talk about the white paper that you guys just released, talking about blended travel and what that is. But first, I want to get an idea of what you're seeing real time right now across the different properties in terms of demand when it comes to consumers, and then also on the supply side in terms of how easy or how tough it is to get employees right now. So let's start with consumers. What's the outlook?
Yeah, absolutely. As we've talked through, there is probably a historic level of pent-up travel demand, both from a leisure that we've been seeing really fastly growing right across countries and across locations, but also on business transient, even business groups starting to really see that come back. There is a desire to get out and connect as never before. And actually across the business landscape, what we've seen coming out of the pandemic, which has been talked about extensively, is the new way of work, right? The new, more flexible, even more remote work. And this is making deep, deep implications across our industry and quite frankly, across all business industries, which is why Crowne Plaza decided to really launch the first ever white paper and thought leadership approach on blended travel. What are the implications for business across sectors? And then how can all of us in hospitality really jump on these trends and look to develop against the needs of increased travelers? And to your point, alongside the pent-up travel demand, we are seeing growth and acceleration of the work for Crowne Plaza with 107 hotels in the pipeline accelerating around these blended travel trends. We're heavily renovating our entire estate, 50% globally, more than 70% across the U.S. So both on the supply side and the demand, we're really leaning into the needs of travelers.
Ginger, a few months ago, or earlier this year, I was talking with the president over at Marriott and also brought up this whole idea of blended travel. Just cut to the chase in terms of what it really means. Does that mean, I travel and I bring my family, or Tim travels and he brings his family? Like, what does that exactly mean?
Great question. So it's really twofold. It historically had always been referred to a bit as leisure, so business and adding leisure. What we're also seeing with the growth of remote travel, actually people traveling for leisure and extending that time, whether it's across the weekends, right? Whether it's Thursday is the new Friday and Monday is the new Sunday, really both ends of how to create that work-life blend. And within our white paper, we discovered 4 key trends that are really driving this force of the new facet of blended travel. Reworking work, so people working from all different locations, right? In addition to warm, sunny resort locations, to actually increasingly city and urban locations, people enabling that flexibility for remote work, both from going on a business trip and adding on leisure stays, and then actually planning a leisure or a long weekend and deciding to work remotely for a couple days.
I wonder.
Secondly,
Ginger,
I like that idea. Like we can go somewhere, Tim, and then just say, hey, we're going to stay in California. Can we just work from the
I'll
hotel?
let you ask our bosses about that, okay? You can be the one, Carol. But it brings me to a good point, though, Ginger. I'm wondering about appetite from employers for this different kind of work style. I was going to say lifestyle, but different kind of work style, because we had a really interesting chat earlier today with Julia Pollack over at ZipRecruiter, who says that, employers aren't doing gymnastics anymore to get people to sign on that line. So I wonder, if we start to see employers more in control just in the last 30 seconds that we have with you.
Yeah, absolutely. In addition to the white paper, we looked at and commissioned additional research in that. And we all know that it's still a war on talent out there, right, to drive the best out of business. And we're seeing from our research that consumers, for example, in the U.S., having that flexibility and being able to have that work-life blend is just as important in some cases as having a higher salary. 53% of employees would have a prioritize flexibility, well, 56% would be a higher salary. So as businesses look across sectors, it's so important to retain and attract the best talent and drive the best results, to have this flexibility. And we're seeing that blended travel is a key portion of this.
Well, great conversation. Look forward to checking with you again down the road. Ginger Taggart, VP of Brand Management over at Global Crowne Plaza Hotels and Resorts.
Let's get to Washington, D.C. now for a check of latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Commerce Secretary Gina Raimondo believes Congress is sounding confident about the chip legislation stalled there in Congress. She believes lawmakers will eventually approve legislation that will liberate billions of dollars for chip makers to build more manufacturing facilities in the U.S. But she admits to Bloomberg it's taking too long, and that's a real risk.
What's at stake is our national security, even beyond the economy. Every piece of military equipment requires chips. If you talk to the heads of national defense contractors, as I have done, or senior ranking officials in the Department of Defense, they're all very worried about the delay.
Raimondo says enactment of the semiconductor incentives is a top priority for the administration, but could be in jeopardy if GOP leader Mitch McConnell refuses to support it. Well, President Biden is applauding progress on gun safety, and today at the White House, he spoke directly to the survivors and families of those impacted by the recent mass shootings.
Now, I know public policy can seem remote, technical, and distant from our everyday lives, but because of your work, your advocacy, your courage, Lives will be saved today and tomorrow because of this.
Biden told those gathered the new gun safety law opens the door to more legislation. The next round of House January 6th hearings is set for tomorrow. Lawmakers say it will focus on right-wing groups and whether former President Trump incited them to attack the Capitol last year. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much, Nancy Lyons in our DC newsroom. Nancy certainly covering some of the news coming out of Washington and tracking this next story too. We want to just bring it to you in a little bit more color. Justin Sink of Bloomberg putting out that nearly 2/3 of Democratic voters say they would prefer someone other than President Joe Biden as their party's candidate in the 2024 election, underscoring the political headwinds the White House faces as inflation soars and Americans sour on the president's performance.
Okay, so let's go into the data here. Of the 64% of respondents who said they wanted a different candidate in the upcoming election, a third cited Biden's age as the reason for their preference. At 79 years old, Biden is the oldest president in U.S. history. Some 32% of respondents to the survey, and this survey, we should note, it was by the New York Times and Siena College, 32% cited the president's job performance, while 1 in 10 said he was not progressive enough. Okay, Carol, so a couple things here. One is, I would note, and there was a lot of pushback to this on Twitter earlier in the day because polls by the New York Times and Siena College didn't necessarily do a great job ahead of the 2020 election predicting the outcome based on states and based on just sheer numbers.
A lot of polls missed it though, right?
2016 and 2020, yeah. So we should read into this poll, I think, with a grain of salt. Two, who do they want instead of President Joe Biden on the Democratic side?
Well, see,
that's a key question.
I mean, this is what elections have been so much about. Not necessarily who I like, but I like you more than I like the other possible contenders.
Well, so let's talk about some of those other possible contenders here. Biden has consistently led in a series of recent YouGov polls that pit him against potential challengers, including his vice president, Kamala Harris, California Governor Gavin Newsom, and Senator Bernie Sanders. Biden has even led in those surveys against Michelle Obama, the popular former first lady, who has said she has no interest in running. So he's still doing better than people they're pitting him against.
That's really fascinating because people have often said, Michelle Obama, if she won, we'd all vote for her. I don't know. I don't know how this is going to play out.
And also, they're not necessarily saying that they won't vote for him again.
Right,
against
exactly.
Trump.
And it all comes down to ultimately, yes, the economy is important, but maybe it's against, against who he might be running or who might be another candidate for the Democratic nomination. Still got to wait and see. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, repeating our earlier headline. Gap has fired CEO Sonia Singhal as the apparel company struggles to leave operational challenges behind it. Chairman Bob Martin is taking over immediately as CEO on an interim basis. We do have Gap shares lower now by 4%. It was a down day on Wall Street. Stocks slumped to kick off the new trading week. Traders are positioning for a hot inflation reading and the start of a key earnings season that may provide clues on whether the economy is heading toward a recession. The S&P 500 index was down 45 points today, down 1.1%. The Dow down 164, down 0.5. NASDAQ down 262, a drop of 2.3%. The 10-year up 24/30 seconds, 10-year yield 2.98%. The 2-year yield, 3.06%. Spot gold down $8 the ounce to $17.33, down 0.5%. West Texas Intermediate crude down 1.3%, 103.46 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So just to point out one of the headlines that crossed recently with something we're going to talk about next, which is Steve Bannon. Our Sabrina Wilmer putting out a story that longtime Donald Trump advisor Steve Bannon will go on trial Monday. So is that today? Yeah, I guess so. In his criminal contempt case for refusing to cooperate with the congressional committee investigating the Capitol riot, even after he offered to publicly testify. So there's a lot going on here when it comes to Mr. Bannon.
We've got a great voice on this. Billy House is congressional reporter for Bloomberg News. Billy joining us once again this afternoon on the phone from Washington, D.C. Okay, Billy, as you and Sabrina wrote earlier today, former President Trump clearing Steve Bannon to speak to a House panel investigating the Capitol insurrection. This sets the stage for a fresh round of potentially dramatic testimony. What do we know about what Steve Bannon is going to say to this panel?
Well, we don't know what he's going to do in terms of other privileges like Fifth Amendment protections against self-incrimination, but we do know that the committee wants to hear from him about his activities at the posh Willard Hotel in downtown Washington on January 5th and on the day of the riot, and whether there were contacts between him and these extremist groups that led the violence and the White House, and whether perhaps he was a go-between. One quick correction, he had a hearing today on motions, but his trial is Monday, and so he quickly got the clearance from Trump to testify in hoping to forestall that trial, but it doesn't look like that's going to happen.
Okay,
so a week
that's
from today.
July 18th, right?
Exactly.
Okay, thank you for saying that straight, because that's why I was a little confused as I read through it. I think it's interesting that former President Donald Trump was like, yeah, we're giving the okay, you can go do this. I'm not quite sure. Trust is probably not the right word, but I'm thinking about when he testifies, is this going to help the committee that's looking into the insurrection, or can they trust what he has to say? Good. Thank you.
First of all, one of the questions to ask is, what is Bannon and Trump's motivation, right?
Thank you.
And one of their motivations, at least in Trump's letter, is that he felt sorry for Bannon, that he was going to face these criminal charges, potentially 2 years in prison for contempt of Congress for not testifying. And so he said, okay, Bannon, you can go ahead and testify. So you could say that was the reason, or you could read another part of Trump's letter saying that is showing how frustrated he was that these January 6th committee hearings were so scripted, so tightly performed with snippets of video and no adversarial witnesses, no hostile cross-examination, that perhaps they thought that Bannon could get in there in a public hearing and shake things up a little bit.
So, Billy, what should our expectations be about what happens after these January 6th hearings? We know about public opinion in the way that it's shifted slightly, but what about potential consequences here? And it's the same question that I asked you just a couple weeks ago when we had you on the program in the wake of Cassidy Hutchinson. But here we are 2 weeks later, and we haven't seen charges against President Trump yet.
No, we don't. And there's maybe one hearing next week, which the
perhaps will be the final hearing until they come back in August to do their report. It's going to make recommendations. But you're right. Polls show, at least polls out in the field so far, don't show much detrimental response by voters toward Trump, at least in his own party. But that was before much of the Hutchinson testimony was given. And now we're hitting into what the committee says is its biggest two hearings. So we do know that there are other Republicans sort of champing at the bit to run for president. Whether they feel that there's some erosion of Trump standing is who knows. But I don't think we've seen how these committee hearings yet will impact in the long run.
I mean, for the committee investigating this, Billy, if Bannon comes out and says, yeah, the president wanted to go up to the Hill, he wanted to do this, I mean, that could be certainly very damaging.
Well, it could be. One of the big questions of the hearing tomorrow that's going to focus on militia groups, of course, is whether Trump's tweeting and everything was just sort of, wink, wink, nod, nod, encouragement for some of these groups to go there and be violent at the Capitol, or whether there was actually a conspiracy and direct communications and plans for that to all happen. So, but certainly we know that former White House counsel Pat Cipollone, feared that just if Trump showed up on the Capitol grounds that day, that alone was going to lead to a lot of criminal charges.
So is Steve Bannon is it going to be public? Is it going to be televised? Is it going to be open? Are we all going to see it?
See, that's one of the things in his letter. His lawyer says he would prefer to testify publicly, and of course Trump probably would like that too. Yeah. And that's where you get to his motivation. The committee says, no, we don't do that for anybody. You come in and talk to us quietly. I mean, behind closed doors. We videotape it, and then we'll see what we play.
Huh. So they control it, basically.
And that's been one of the complaints by critics of these hearings, is that it's far from a trial, far from a regular hearing. It's a one-sided performance put together by a former TV executive. And that's true, but others can say, well, they were able to cut through the usual dull, dramatic, long-winded hearings that we see normally and present a concise picture to the American public of what happened.
Hey, Billy, I want to just venture away from the actual hearings for a second and talk Liz Cheney, because it's interesting to see the way that she's come under attack in her home state and essentially being primaried. Not even essentially, she is being primaried. Just give us an update on the political price that she may pay.
She faces a huge crisis. There's, in fact, so much so that her own campaign material and such is now reaching out to Democrats in Wyoming to please, if you could, change party for just this primary and vote in the Republican side and vote for me.
Okay, Billy, what does that tell you about President Trump's standing within the Republican Party, at least on the primary level?
And at least in Wyoming, I was out there 3 weeks ago, and I couldn't find hardly any Republicans who supported Cheney and didn't beam still about Trump. She's in real trouble. So short term, she's got a real battle on her hand. The primary, I believe, is August 13th, and she might lose that. But the question is long term. Does Cheney gain in the long run by some of her positions? That's a good point. We'll see.
Where's Jimmy Stewart? Mr. Smith Goes to Washington, right? When people stood up and took a position. Billy House, thank you so much. So appreciate your time and all your reporting. Billy House, congressional reporter at Bloomberg News, on the phone from D.C., but with some great insight in terms of what's going on with these hearings.
Yeah, it's remarkable. And, all of this, of course, I know that they're probably hoping to wrap up before the midterm elections, and to what extent it actually gets people to the polls for the midterms remains to be seen.
Interesting to have this conversation and how much time we spend talking about recession, inflation. I mean, ultimately, when Americans go to the polls, what's going to really matter, right? Do I have a job? Can I afford things?
What is it, Carol? It's the economy?
Stupid. Yeah. Not to you, but, the saying. All right, folks. For Tim Stanovic and the whole Bloomberg Business Week team, I'm Carol Masser, and this is Bloomberg.